In today's video, I'm going to be giving you a review on how my trade paid out. That means I'm going to be showing you if I had a profit or if I had a loss. And again, I'm going to be doing a self-analysis. I'm going to be showing you how I do my self-analysis to understand to understand the reason why I had a profit or the reason why I had a loss. But before going to that, if you're seeing me for the first time, my name is Divine, and what I basically do on this channel is document how I trade, and I'm going to show you the mindset behind my strategy. If you know something like this, I want you to smash the subscribe button. I'll be right back. My entry now is based on what price is likely going to do if price open tomorrow being Monday. If price start going to the upside, then I'm looking for a sell. But if price start going to the downside, then I'm going to be looking for a buy. And where am I going to sell from? I'm likely going to be selling from this point because I'm expecting price to go down because price is in a downtrend. I'm expecting price to sell. I'm expecting price to buy from this point here, put my stop loss above this point here, and target this point as TP1 and possibly target here as my full TP. So basically, my entry now is based on what price is likely going to do, and I'm expecting price to first of all give me a little buy to this point here. Then I'm looking to sell to this supply to this zone here, this swing low that is at this point here. Remember, this point is a point of liquidity, and this point is the swing low that price created on this trend because price in the downtrend. So I'm basically looking for price to give us a little buy, then we'll be looking for a sell to the downside. Now, this is how this trade played out. I was able to make almost 107 pips off this trade, and the entry was done on the 1 hour time frame, and I was able to make almost 137 pips on this trade. Now, the amount of money I made on this trade is basically about $50 or so. And you might be wondering why I made that small amount of money, even if it's a very good trade. Now, the reason is this: I have a very small account. I trade a $200 account, and I do not trade profit due to reason best known to me. I try to avoid profit. Now, the goal here is to basically understand that I can do this over and over and over and over again, and then see how I can be able to scale up my capital. The most important thing in trading is being able to scale up your capital, and I'm working hard to see how I can be able to scale up my capital so I can be able to maximize this opportunity that I have on this trade. But for now, I was able to make this amount of money, and this is because I have a very small account. Now, let me try and do a self-analysis to the reason why we won this trade and understand if we could have lost this trade, right? Now, first of all, how many stop losses do I have? I have only 38 pip stop loss, so I wasn't going to lose more than $38 on this trade. I was going to lose more than $38, and I was willing to lose that amount of money just to make it be a profit. So basically, the most important thing here is to first of all understand how much you want to really lose, and be willing to lose that particular amount that you want to lose. So having understood that, I was willing to lose the trade. So even if the trade went to a loss, I'm still going to be fine. And if you went to profit, I'm still going to be better. But would I have lost this trade? Yes, because it's not guaranteed. There's nothing guaranteed in this trading. The only way you can be able to maximize your profits as well minimize losses is understanding risk management. And I understood the risk management in this trade. Now, what gave me the confidence? The confidence is this: when price did all this transaction at this point, then I understood that price was going to set to the downside. Why? Because at this point here, price induced liquidity at this point here. So even if price was going to the upside, I was very certain that price likely going to come back to the downside. And when price got to this point as well, price also induced another liquidity at this point. So all these things gave me confirmation that price likely going to come to the downside. So I was able to hold this trade to the length at which I held the trade. So the whole goal here is understanding that you have to be able to apply a very good risk management, and then you still also need to understand the price action behind every trade as much as well to boost your confidence in a particular trade. Now, what would have made me to maybe close this trade or maybe not hold this trade this long period of time? What would have made me do that? Now, had it been price was giving a price action at this point here, that price is likely going to go to downside, then I could have been thinking of exiting at this point. Because if price was going to buy, I would expect price to come back to the downside at this point, leaving this liquidity at this point here, right? I would have expected price to come back to this point, then price will start going to the upside and possibly hit my stop loss. So because price induced liquidity at this point and failed to take out this liquidity as well too, I was confident that price was likely going to come back to the downside. And that was how I was able to hold this trade up to this point that it is at the moment. Now, let's analyze gold and see what gold is likely going to be doing for the rest of the week. That means let's go and analyze gold and see the possible entry and as well see if we can take trades on gold. Let's quickly do this. Now this is gold. And remember, the first thing we want to always do is to go to the higher time frame and understand where price is going to on the higher time frame. And I like to use daily time frame as my higher time frame to know where price is going to and where price is not going to. How do we identify that? We want to simply use our trend line to understand how price is moving by simply identifying support and the resistance level. And now if you look at gold here, you will see that gold look like if it's going to the upside. But what is the trend saying? How is the trend moving? We want to always use the trend to understand how price is moving and basically use the trend to make decisions in the market. And now if I'm to draw my trend line, I can simply see that this point here, I can simply see that this point here is simply the point where price acting as a support here, although was acting as a resistance. That means at this point here, price was a support, buying pushing price to the upside. At the point, price broke the trend and it became a resistance at this point. So at this point here, it was a support, and here a resistance, and now acting as a support. That means gold is in uptrend. I want to be looking for buy opportunities on gold. But where are we going to buy from? Where are we going to sell from? Or where are we going to buy from? For us to understand where we're going to buy from, simply need to identify the key levels in the market. Where is the key level? If you understand where the key level is, that means you're able to know where you're going to buy from or sell from. Now, I haven't identified that price. I haven't identified the support here. There's always going to be a resistance for every support. Now, where is the resistance? For us to get the resistance, we want to simply see how we can draw from this point. As you can see, this is a value resistance. First touch, second touch, third touch, fourth touch, and fifth touch. So this is a valid resistance for this particular support at this point here. Now, how do we identify our key level? Now, the first point of key level is this point here. This point is the first key level, and this is the resistance key level here. So I'm going to remove this support and resistance I've drawn now just for our chart to be a bit clear. Now I've identified the support key level and the resistance key level, and our interest now is, or our focus now is simply what price has done from this point to this point. How the price move from this point to this point. Then we can know if price is likely going to start going to the downside from this point, or price is likely going to start pushing to the upside and break above this resistance level here. So what we want to identify now is to simply know if price is going to start coming down from this point, or price is likely going to continue to the upside, even if price is in a down is in an uptrend. How do you do that? We want to simply go to the 4 hours time frame and understand market structure. Remember what market structure is, how price is moving, how is price moving from this point to this point. Then we can know how we're going to buy or how we're going to sell, depending on what price is saying at every point of resistance. Remember, price is currently at the resistance key level, and here price is basically on the support key level. Here is support key level. We want to understand what price is doing from this support key level to this resistance key level on the 4 hours time frame. Now, on the 4 hours time frame, we can simply see that it's an uptrend. That means price is an uptrend. I want to be looking for we want to be looking for supply and demand zone. What is supply zone and what is demand zone? Now, if you look close at this point here, you see that price gave us a rally, a base, and a rally, right? So this point here is a demand zone because price is in an uptrend. This point here simply a demand zone, right? Yes. And again, when price made that movement, price gave us another rally, base, rally. Still a demand zone at this point here. So this point here is simply a demand zone. This point is simply a demand zone, right? And again, when price make that movement, price will give us another rally, base, and a rally. So we're able to identify three different demand zones in this point. And I want to know the one that's likely going to be the one that's going to price is going to use to buy to a particular area. That means if gold is going to buy, since price is in an uptrend on the daily time frame, at what demand zone is price going to buy from? I've identified different demand zone. One, two, three different demand zone. Which one is price likely going to use to move to the upside? Because price is an upside. Then we'll take us to the 1 hour time frame. We're going to refine these zones to become point of interest. Remember, a supply and demand zone should be refined to a point of interest on the 1 hour time frame. So I'm basically going to switch to the 1 hour time frame here. And if I'm to refine this first one that is at this point here, I can simply refine this point here to become our demand zone here, or point of interest caused by a demand zone, right? This point is a demand zone. Now, if I'm to define this one, I will simply say that this point is not really a demand zone, but instead is where price engineer liquidity, and this point is a point of liquidity here, right? This point is a point of liquidity. Now, the next one again to define is basically this one here. If I'm to define this zone now, it's going to simply be at this one to be our demand zone here. So these are demand point of interest. So out of the three demand zones that we saw, we're able to simply refine these two as our point of interest, right? Now, how do we know what price is likely going to do? Because price is in an uptrend, we're simply wanting price to come back to any of these zones, and then we can buy to the upside. Either price come back to this zone and we'll buy, or price come back to this zone and we can buy. Now, how do I know if price is going to come back to this zone or price is likely going to go back to the upside? Now, for me to buy first, I simply want to understand what price is doing at this level here. What is price doing at this point here? Is price giving me a change of character that price is going to go to downside? Is price inducing liquidity? What is price doing at this point for me to know what I'm going to basically do? If price is going to continue buying from this point or break above this resistance and continue to the upside. How am I going to do that? I'm simply going to go to the 15 minutes time frame and understand what price is doing at this point to know if price is likely going to go to the upside or price is likely going to start coming down to these demand zones for a bigger buy. Now, on the 15 minutes time frame at this point here, what I can clearly see at this point is this. Price is inducing liquidity at this point here, creating the impression that price is about to buy. And I can clearly see that at this point here, this is to support at this point here, right? And price is simply giving us impression that price is about to go to the upside, right? Giving us this swing low here, this swing high here, swing low here. It then means that price is likely going to give us a swing high here. But is that guaranteed yet? We're not sure. So at this point here, we're not likely going to take any action at this point here because before price have to make a big move, price have to make a fake move, and price have not made a fake move yet, and price is still in an impulsive move. So from all these points here are simply an impulsive move that price is making, and for every impulsive move, there's likely going to be a correction. So in this case, what I'm going to do is this: I'm going to be waiting for what price is likely going to do at this point. If price are going to the upside, then I'm going to be looking for a sell. I'm going to be looking for a sell to the downside, right? If price are going to the upside, I'm going to be expecting a sell. And where am I going to sell? Where am I going to sell to? I'm going to sell it to any of these supply zone, any of the demand zone here. That means if price are going to the upside, I'm not going to chase price. I'm going to simply allow price to go to the upside and then give me a reason to sell. And I'm going to be likely selling to this demand zone here. And depending on how price get to this demand zone, I'm going to know if I'm still going to sell to this other demand zone here. And why will I do that? Now, remember on the 1 hour time frame, we're able to identify a pot of liquidity at this point here, and price is likely going to come back for this liquidity before price continue to the impulsive move or go to the upside. So basically, my entry area is this: if price start going to the upside, take out this all this liquidity at this upside, then I'm going to be looking for a sell to the downside, and I'm going to set to this point as my TP1, and possibly at this point as my TP2. But I'm not going to take this trade now until I see reason to take the trade, right? Now, the reason I want to take this point is because all these points here are simply trendline liquidities. The stop loss at this point, stop losses, stop losses, stop losses. So everybody who has buy at this point here I've actually put a stop loss at this point. Price have engineered them to put the stop loss at this point, and price likely going to come back to seek all these liquidities before price continue to grab liquidity. So basically, my entry on this trade now is to simply wait for price to come back a bit for a correction, then for a continuation. And the correction is simply going to sweep out the liquidities that is on this trend, and then simply take out this one as well too for a continuous buy. I think this will be all for this video. I will see you in my next video. Peace.